The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
So what do we have going on today? Well, we're up almost 11 points at 2803.50 on the S&P cash. Got as low as 2,800, as high as 2,812. So we're almost, let's say we were down about halfway off the pop. Not a lot of volume on the way up, not a lot of volume on the way down. Again, this is going to be one of these days where we probably have to wait for the close. I've seen a great deal of many stocks have some fairly decent bounces and give either all of it or half of it back, depending on how short they are. Seems the shorter that they are, the more that they kept a little bit, making me think that these are some kind of short squeezes into it. Other than that, we're going to look at a lot of charts today. Had a very interesting email from one of our dear listeners, and I think I probably need to explain what volume trading actually is. Everybody, I think, has the wrong intimation in that the market instantly falls apart or a stock instantly doesn't go higher. If you come down, as we have with a lot of volume, we come back up with a lot of volume, or with not much volume, and you get back to the previous high and the volume's about 90%, then yeah, you can go higher. But if you have a bunch of stocks that are up testing previous highs on 50% volume, well, every time I've seen that happen, you had rather significant pullbacks in a market. And I don't mean like 90% of the time. I mean like all the time. And they've been rather large. Now, the question is, did everything just instantly fall apart? And the answer is no. Even if you go back to the May 5th highs in 2008 for all of the broker-dealers, the banks, a handful of other stocks, you'll see that they all came back and retested that some fall highs on about half the volume, but all the way on the way back up. The same thing happened. On the opposite side, March of 2000, was it? Yeah, March of 2009, maybe March 5th, maybe March 9th, somewhere in there. This is all from memory. We had stocks test the previous low, and I bought all the stocks that were testing previous lows on. In fact, so many of them were testing on 50% that I ended up buying a lot of stocks that tested previous lows on 20 and 10%. These things were monster winners. And I think everybody thinks that, you know, you're just going to, it's just like a slot machine. You're just going to pull the giant arm and money's going to fall out. It doesn't happen that way in a slot machine, nor in the market either. These things build to a critical level, and then everybody looks in the rearview mirror and says, well, I could have told you that. All we know is that volume, especially at highs, are significant warning signals of the weakness of a market. If you come up and you bust previous highs with lots of volume, you have a sign of strength. Generally, you're fairly clear. If you come up on light volume on individual stocks, and a lot of times it's because you're waiting for earnings. Well, we're pretty much done with earnings. Now we're back up at previous highs, and you can't hold a high. I've seen one stock that I'm short. It's in the mid $200 range stock. This thing's been banging up $3 every day. And again, today it's back, not much, but a little negative already today. And that is the sign, if you get enough of those, not just one, not just 5, but as we've been going through the last week, it's the warning. Then you want to look at other things, confirm that. And of course, you also want to know what market conditions are like. We'll talk more about that today. But the answer isn't that you're going to retire next month because of low volume either at highs or lows. The answer is that asymmetrical winnings in the market come at those giant inflection points where the volume comes out. You're going to make a lot of money. If you're going to make a lot of money, it's going to be when those volumes are highly divergent to what the market direction is actually telling you. So what you want to look at is that divergence. If you want to be short, wait until you test previous highs. You get up there with with light volume, like we're going to go and look at charts today at 50%, they are telling you something. They aren't telling you that if you short today, you're going to be rich tomorrow. They are telling you, as a whole, the wisdom of crowds, that there's something going on. And that sometimes you know it, sometimes you don't. All I knew in 2008 was in that May 5th? May 5th was that I had never seen that before, probably because I hadn't been looking for it. But it was something that at that point made me as a trader when I started pointing it out. Same thing as when we started testing the lows in March, it was March 5th of 2009, of when we went long all those particular stocks on light volume. So it's something that probably we should talk a lot more about. But my style of trading, unfortunately, means that you're going to have to do a lot of work. It's not something you can put on a bumper sticker, just like trading volume. There's a little bit more to it. And maybe I should spend a little bit more time talking about that on the show. We'll look at some charts today. Maybe I'll put a little seasoning on the show today, talk a little bit more about how I trade. Anyway, that's kind of the beginning of it. When we come back, we'll do a little history. We'll start looking at some charts. But, you know, what I was looking at this morning was I was pretty sure about 90% of the time that you break highs like 2,700 or 2,800 in the S&P cash and you pop above it, you're going to go back and retest that century mark. Is that century? Yeah, century mark that day, probably 90% of the time. And the way it comes back there can tell you a whole lot. Today we pushed real hard for a while. Now we're back testing that level. We haven't had really an instant rejection. We just haven't had an instant failure either. So as we go to break, we'll come back, do a little history. We'll look at some more charts out here.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at Taz has even put together a 12-part video series to walk you through every aspect of the Taz Profile Scanner, which you can find directly on the Taz order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the Taz Profile Scanner by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we're hovering up about 11 points on the S&P cash. About, has that been updated? I don't know why the NASDAQ's not updating. Should be up 45 on the NASDAQ, up 5 on the Russell. Let's do a little history and then we'll get going.
And it's all just a little bit of history repeating.
On this day in 1862, the U.S. Congress passes the Legal Tender Act, authorizing the use of paper notes to pay for government bills. This ended the long-standing practice of using only gold or silver in transactions, and it allowed the government to finance the enormously costly uncivil war long after the gold and silver reserves were depleted. Several proposals involving the use of bonds were suggested. Finally, Congress began printing money and has never stopped, which the Confederate government had been doing since the beginning of the war. The Legal Tender Act allowed the government to print $150 million in paper money that was not backed by a similar amount of gold and silver. And so it started. Same as it ever was. Same as it ever was. Who knew that talking heads would be so prophetic? Okay, so what else do we have going on out here? We want to take a look at some charts. Again, just kind of hovering like my mother used to hover over me at 2803. Let's take a look at some of these other ones. Got a handful of stocks, so we'll go through them as quickly as we can if everything's working. Oh, did I do that wrong? Nah. Not much in that one. Let's look. Autodesk is DSK has broken and gapped up. You need about 3.3 million shares. You got a little spike out here with 1.5 million shares. So again, what you would want to do on this one is if you think it's going to give up the ghost, you want to close back above 159.94. You don't want the volume to exceed probably about 2 million shares in the next couple of days. And it does need to close back below. Once it does, then you're probably looking at a pullback to about 155 on the first move. AEP, which is American Electric Power, rolled over today. You were looking at the December 14th, $81.05 high, 3.3 million shares got into it Friday, with 1.8 million shares. Today down on 1.3 million shares. What else do we have? Aetna Zentaris. Now, this one's just spiking above. I spent a lot of time on it. Again, you can email me at path@tfnn.com. You can also call me at 877-927-6648. Email me at path@tfnn.com, and of course, put a message in the den. You're down today on November 8th. Gap down. That happened with 1.3 million shares in AMVAC Financial. Today you're up with 86,000 shares, or back into that. Again, these aren't little differences. These are pretty major differences in a way a lot of these companies are attacking previous highs. Accuray, another one, it's $5 stock. I wouldn't be shorting it, but it is kind of interesting. All the stocks that are out here testing previous highs on fairly light volume. November 7th high, $5.30, came in with 2.4 million shares. You spiked that with a doji on Friday with less than 1 million shares. Today, tried to get a little bit higher, 307,000 shares, though. So there just isn't a lot of volume. What else do we have? Rena Pharmaceuticals. We'll take a look at the IBB right after that. That seemed to be one of the weaker sectors. I know that there have been some buyouts and stuff, so we'll look at it today. Arena Pharmaceuticals, ARNA is the symbol. June 20th, $50.05, 1 million shares. So we spiked that today with 230,000 shares so far. So you're a little bit more than a fifth of the volume back in there. And of course, it looks like you could close back below that $50.05 high, which would be a valid sell signal. ASB, what else do we have out here? Associated Bank Corp, another bank. Its gap down came on the 19th of October, 3.3 million shares, back up into that with 412,000 shares. AVT, which is Avnet, Hamilton Avnet. We talked about this one last week. It's breaking through, or trying to break through, the December 3rd high, $44.97. That had 1.2 million shares. You got 259,000 shares. So again, energy off these lows, very light. Energy at the highs, ridiculously light, as we tried to break through new highs today. Berry Plastics, interesting stock. Didn't know much about it before it started hearing my scans. BERY, and of course, I'm sure they had something to do with the graduate. Down on May 3rd of last year on 6.6 million shares, as we're up today in that and filling that gap with 677,000 shares so far. BWA, which is Borg Warner, had a fairly decent bounce off this December 26th low. Now we're banging against the November 2nd high, $41.46, 5.6 million shares. Been banging against it with 2.5 million shares on the 15th. Today, 600,000 shares. So again, when I'm talking about light volume, we're talking about at least statistically a huge anomaly. Not much in that. COP, ConocoPhillips, wanted to see how this one was banging against its gap down that started on October 23rd. Came down on 7.5 million shares. You tried to come into it a couple of times. The last few days, though, 6 million shares, 5.3 million shares on Friday. Today so far, 2.5 million shares. So even some of these stronger ones are having problems at previous highs. Yes, you are. Corvus Pharmaceuticals Holdings, CRBP, banging against a 7 million share high on October 2nd, $8.57. As I said, 7 million shares. Got into it with 3 million shares on February 15th. Tried to move a little higher today with 700,000 shares. Again, very, very light shares. We talked about a couple of days last week, talked about the rails being fairly weak at these highs, and especially off these lows from December 26. We aren't quite there. We're with about 40 cents. But man, talk about zero volume back up to the December 3rd high in CSX. $73.90, 8.5 million shares. Today, a little less than 2 million shares. So not much happening out there. As we go to Dunkin' Brands. Oh, we're going to break. So we'll be back. We'll talk about having a little donut. Maybe some donut holes. But certainly not rousing endorsement of higher prices over the last couple of days.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Let me get this out of the way. IBB. Can it return to its high? I think everything can return to its highs one day. Question is when. It's been kind of the weakest of the bunch. Today you're breaking above it. Volume is not as bad as it's been. And again, I think that's because some of the buyouts out here. You need 2.5 million shares by the end of the day. You got 1.9. But it's still been fairly weak over off this December 24th low. But never really got a test of the high. You got it today. Now, a close back below 111.60 would be problematic. And that's for somebody with some spidey sense. Spider-Ron? Spider-Ron? Maybe that's who it is. I'm not saying that this is a extremely bullish chart. In fact, I'd probably say just the other. And most of it is just the energy off that December 3rd high. Another problem with this is going into yet another election season. The biotechs are the favorite whipping boy of this particular market. I think once everybody gets over it, it can move higher. Nothing long term, but I'm pretty much looking for a fairly significant pullback in the market, and that we've gone much higher without that pullback. Markets tend to be kind of like rubber bands. The farther you stretch them, the harder they break when they do break and snap. And I thought we were just going to have kind of a little bit of pullback. But now, especially this push with over the last 7 to 10 days or so, with no volume and so many stocks. Now, you're always going to have stocks in the leading stock of the market. Right now, that's Microsoft. So they're going to push that thing like they haven't pushed any other stock in the world. Guess what? The old saying was you can't get fired for buying IBM. Well, that was for buying the actual computers. But it was pretty much true for the stock for a while. And it was true for Apple for a while. And it was true for Amazon for a while. And now it's true for kind of Microsoft for a while. But what you wanted to see in Microsoft today, going into this December 3rd high of 113.42, was about 35 million shares. You got about 15 so far. So again, so many of these stocks are just retesting highs. Now, what I can tell you is that for Microsoft, the energy off this December 26 low is scary. I mean, absolutely scary. This is the kind of energy change that you see in, or that I saw in those banks back in 2007 and 8. So I don't see anything that could be that problematic. But I do suspect that you're going to get at least a fairly significant pullback. And that 2650 area is on the S&P cash has kind of been my target for a while. So we'll see it. 2801 on the S&P cash. Keep those cards and letters going. Thanks, Mr. Spidey Sense, Ron. And what else do we have? Oh, we got more stocks. Anyway, we looked at Dunkin' Donuts, HEI, which is Telco, testing its previous high of 770,000 shares on September 6th. That was $94.12. And today you got 231,000 shares as you broke through that high. Again, very important day. That is, we've got a lot more stocks out here testing the previous highs. If they close below previous highs, many of these, if not most, will have giant sell signals. Won't mean that you want to short all of them. You want to find the weakest ones of the bunch. But I'm kind of already doing that already today on the show, which is finding the weakest one. Intuitive Surgical, pretty light volatility over the last 4 or 5 days. This thing tends to be a real mover. Today up on less than 300,000 shares so far, going into a 1.1 million share high on December 3rd, $548. And, of course, a 1.3 million share high on November 7th. But, again, just incredibly wimpy volume as you see it. Okay. Johnson Controls, up on 9.5 million shares on November 13th, $35.74. And, of course, Friday, 3.5 million shares. Today, 1.4 million shares as you finally do break through that November 13th high. Again, a close below 35.74 would be a significant signal that these stocks had topped, at least for a while. MDU Resources Group, MDU is the symbol, just a hair under $27 on December 4th with 1.3 million shares. On Friday, you had 600,000 shares. Today, you got about that, but it is starting to go down. You did go above the previous high. You're going to close below that high, so that continues to be an issue. Other stocks out here that are interesting to me, Mercado Libre, MELI. Last high was 800,000 shares on December 3rd. That was 374.84. I had a little doji into that today so far with 400,000 shares. So you're halfway to the volume mark with an hour and a half left to go. Merck, and don't smirk, above its $80.19 high of December 4th. That had 21.4 million shares. Friday, you got into it with 8 million shares. Today, with 5 million shares, you've gone above that. The question is, if you close below $80.19, you have a extremely bearish chart in Merck, MRK. NCR. Back up against to its resistance levels so far today, 305,000 shares. That goes back to a gap down on July 27th of last year with 4.5 million shares. So 4.5 million shares or 300,000 shares. Gives you a little bit of indication of just how significant the volume decrease is. It's not just a little in most of these stocks. It's fairly massive. Neogenomics, NEO. Maybe they watched The Matrix too many times. $19.04, November 1st. 2.2 million shares at that $19 high. Went above it today. You got 545,000 shares. So into it with 25% of the volume so far. Again, I wouldn't be shorting stocks less than 30 bucks, but just how many stocks out here that are hitting highs today with lighter volume is rather spectacular. Do I got everything? Okay. Got some emails we'll get back to after the break. As we go into that break, we're up a little less than 10 points at 2802. Dow's up 117.60. Nasdaq's up 46.46. Russell's up $4.67. Be back in a second.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And of course, oil kind of coming down on some comments by the president. And let me go look at that fairly quickly. We're down 3.14% today. Fairly interesting action in it. Gold not moving much, down $2.70. Silver off almost a nickel. Platinum up $9.20. Copper still hanging below the $3 level, $2.94. Oracle banging against previous highs. The last high had 20 million shares. If you wanted to be charitable, you can go back to the March 13th high of last year that had 16.2 million shares. But that's going into it today with 17.8 million shares. So fairly light volume again in some of these stocks like Oracle. I do think Oracle is one of the more vulnerable tech stocks. They, of course, make database software, and a great deal of that database software is going to either free databases like from, what is it, Red Hat, who's being bought by somebody that I can't remember now who, and Microsoft. Oracle's kind of the odd man out. Energy's not as bad as I would think off this December 26th low, if I'm right on that theory. But I do suspect that they are certainly range bound above $53 unless something magical happens. I do not think anything magical will happen. Oh, IBM, yeah. I just couldn't remember off the top of my head. But again, you've got that. IBM probably pretty smart for getting into Red Hat. I'm thinking Oracle probably thinks that they made a mistake not buying them. Microsoft bought GitHub, but that's more about development and a little less about owning the rights to databases. So kind of apples and oranges between those two. To me, the whole thing about Red Hat is this being the service support staff for all these Unix machines that aren't running with people that already have their own support staff, which is the real problem. If you're at Amazon or Google or even Microsoft, you've got all your own people. And in fact, you can go to the guy that actually wrote the software if you've got problems. If you're somebody like Oracle, you're always running on somebody else's machine, and they may not give you first swing at solving a technical issue. I don't know from experience, but in the past, it's been a problem if you've not been the best or the big guy on campus in that sector. Restoration Hardware Holdings, this stock seemed rather questionable. Did have some nice tests of the previous lows, never quite got to the October 24th low. What I see in this one today is 5.8 million shares down on the September 5th down day. Got up there with 6 million shares on December 4th. So you were looking for a retest. Now today, you're going through those 6 million share day highs with 536,000 shares. Now, a word of warning. Let me check this to make sure that I'm right. This has like a massive short. Yeah, 7 days to cover. Or I would be short this one. This one is incredibly light volume. The only thing you can do on these is hope that someone pops the stock, runs all the easy weak-handed shorts out of it, and you can get a position. A lot of times it just rolls with no apparent warning. RP, real page, going above its previous high of November 2nd. That's $58.47. 1.5 million shares. You got a whopping 700,000 shares so far. So again, I can go back through a whole bunch more. There just aren't a lot of these stocks that are giving some fairly decent signals out here. It's very, very quiet on the Western Front. ProShares Ultra S&P 500, the SSO, not quite to its November 8th high, 118.18. That had 2 million shares. You're up into that today with 1.5 million shares. Much lighter volume on Friday. Solar Winds, who has nothing to do with solar, has to do with cloud websites and cloud systems anyway. Don't like the name of this company because it makes you think that it's solar cells or something. Anyway, SWI, $19.04. That's December 13th high. That had 1.5 million shares. You got into it with 400,000 shares back on the 15th of this month. Today you're into it with 71,000 shares. So again, I mean, just sickeningly light volume today. And a lot of these things are challenging their previous highs. Stanley Black & Decker, one of my favorite companies. Who doesn't like a new drill, cordless drill, especially cordless, or a new set of screwdrivers or a 90-degree angle? Man, they make just all the stuff that a guy loves. They do for me. SWK back into the 139.45, December 3rd high. A high that Tim the Tool Man, Taylor, would love. 2.6 million shares on that December 3rd high. Today, you got to it. You went above it with 40 cents, and you reversed right out of it with 548,000 shares. Again, that's 25% of the volume or less. So you, by the end of the day. So these things are given fairly significant warnings that you are up here on extremely light volume. Let's go ahead and update this, make sure. Okay. We're at 28.03 on the S&P cash. Last one on my parade of light volume tops is VeriSign. This got to 176.76 on November 2nd with 4.4 billion shares. Friday came into that with 506,000 shares. Today, so far, 302,000 shares. Let's go ahead and check. Did I get anything else? Someone wanted me to look at Netflix again, NFLX. Of course, Academy Awards last night. I don't think those are going to do much for anybody anymore. No, I didn't watch them. I don't watch a bunch of whiny babies. What do you have in here? Energy. It's actually one of the stronger FANG stocks. A lot of them have other issues out here. You haven't quite tested anything, but you know, you're back into this 32 million share high from October 17th last year, and today you got about 6.2 million shares so far. So again, when we're talking about light volume, you can either look at the candles down below or you can look at the labels above. There just isn't any volume as we come into these. So the best thing that could happen is they go sideways for a while, chew through the highs, and eventually make it higher, or they fail. We'll be back in a minute.
We both know you've got what it takes to crush your goals with the will to make it happen. So why haven't you accomplished it yet? For most, the answer is fear. Fear is that limiting factor that stops us from getting what we truly want, but it doesn't have to. That's why on Wednesday, February 27th from 5 to 6 p.m., I'll be hosting my one-hour workshop, Overcoming Fear in 5 Easy Steps. Hi, I'm Steve Rhodes, the 2018 Market Timer of the Year, author of Mastering Probability, and an expert in human emotion. Subscribers to Mastering Probability gain free access to this extraordinary workshop where I'll coach you how to bust through your barriers of fear. How you respond to fear is what sets you apart from the rest of the crowd. Look, this could be the most valuable hour we ever spend together. So come to the homepage of TFNN.com and begin your 30-day risk-free trial of Mastering Probability and take the next step towards the life you deserve.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're 2801 on the S&P cash. As I said, just kind of hovering around here. Any close negative on the day would be fairly significant, not only because the S&P, but I have a feeling that would turn a bunch of these stocks where I've had 20, 30, 40 of them each day showing up on my scans. I imagine I could see maybe 300, 400 of them show up on my scan tonight. We do close, I want to say 8 points lower on the S&P cash. We're going to have a lot of them, but ridiculously light volume. A lot of the volume in the actual market is being really driven by the ETFs and not by any individual stocks themselves, kind of masking what you actually get. We're just a little under 5 billion shares, actually 4.9 billion shares with an hour to go. So, you know, you really at these highs need to be doing probably something like 8.5, 9 billion shares on the CBOE consolidated tape that we're doing probably about on scale for maybe 7 billion shares. Still shows just how incredibly light, even with all the volume in the ETFs and not in the actual stocks themselves, how light this is. The last stock I wanted to look at was one that you want to watch into the close of the next couple of days. That's Checkpoint Software, CHKP. It's one we highlighted last week. Last high, September 17th, 120.81. That's 1.8 million shares. Got into that on Friday with 435,000 shares. You're down today off. We're making a slightly higher high with 622,000 shares. But again, just no juice as everybody is prairie dogging. They're sticking their head up, they're turtling, they're sticking their head out, and they don't like what they see. There's not the people coming in to buy. In the meantime, sell when you can, and I really mean that today, not when you have to. And we'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.